Hi everyone, it's Harry. So it's Monday. We went through a bit of I guess not a shocker, but surprise is the Israeli U.S. Bombing and declaration of war against Iran. And if you were online yesterday and was watching my YouTube blurb, you may have caught a little bit of a nugget where I said, the markets haven't opened yet. Uh, Pre invasion and go fill up your tank. Hopefully I've saved you about a nickel um, a liter or so on filling up a gas, a little nugget. Not a lot of money, but hey, a few bucks in your jeans maybe buys a coffee. So what have we seen? Well, we're I've started to see a bit of an increase due to our spring market. I have a couple of clients. We've lost out in bidding wars, and given a balanced market, you'd never expect that, where things went over lists and 3-4% over lists, and sometimes even more than that. And if you look at the February averages numbers which have come out, and I will discuss, things are selling like on average 2 to 3% below list. So what it says is that there are folks out there interested in buying, and if it's the right property, you may face competition, and we're headed to that spring market. I've been trying to get my buyers to buy before spring. Got caught up in a bit of a bidding war. Hopefully, we'll get something um, that's lucrative for them. I hate um, watching people overpay for homes. I remembered about a year and a half ago when I got my daughter and her husband into a home when they moved back to Calgary. When it was still a seller's market, we looked at 50 properties, umpteen number of bids before and competitive bids. We tried different strategies, before the deadlines and all these wonderful things. And finally, we found someone willing to accept our bid at the right price. Not to say that we didn't try valiantly on a few of them. So, what do the numbers for February show? Well, inventory is definitely up versus last year. We're up 16% overall in the Calgary market, but sales are down. We're down 11% overall. However, prices are up. Kind of inflationary. I've been telling folks, I expect this year to look like stay flat to last year with some inflation effects. This war might bump up our inflation a little bit. With inflation rising, you might see again a bit of a ceiling on our pricing. Uncertainty doesn't make people feel good. However, we're a world away from Iran. However, we are still suffering the shocks. If you looked at the Canadian Stock Exchange and the oil pricing, you start to see the effects. And, housing being a large investment for any residential owner, um, these knock on big effects kind of make you react, and it might change your sentiment. But overall, prices are up, they're at 627, 628 overall. We're still in a balanced market at about 3.2 months of supply. I haven't seen the full onset of the spring market. Expect it's coming now. Seeing some effects at the end of February here. Let's chat about the detached market, because single family homes, that's a lot of interest to a lot of folks. Where are we? We're kind of neutral. I thought we'd be neutral, and so far we're neutral to last year. We're 807. It is up from January as we expected would be, because we're approaching the spring market, but we're neutral to last year. Sales are down. Inventory is up again 15%, and sales are down 4%. So you're looking at about 2.7 months. You're in a balanced market. But as I said before, if it's the right property, don't be surprised if you're facing some competition, because there have been a lot of folks sitting on the sidelines. That's where we're at. And I always talk to the apartment market, because that's the market that's really in a buyer scenario. We're kind of actually up overall. less than 1%. So it's kind of almost neutral as we expected. And with 4.6 months of supply and a continual supply coming on the market, I don't expect prices to increase that much. The only thing that might force the increase is that builders aren't going to lose money, and they have to capture the new inflationary costs that cost to build them over the last year to 2 years, and that'll keep our prices up. The only market right now that is showing, just because of a lack of supply in some respects, versus the buying public, and although the inventory has gone up 27%, it's a semi-detached market. The prices are neutral at 672, but we're at 2.4 months of supply, suggesting we are in a buyer's market that way. We'll probably flirt between that and a balanced market. What's happened is, I think affordability has shifted a lot of folks out of the detached market. So people are starting to look at these semi-detached homes as an alternative, because you still get a decent land piece and passive appreciation over time because of land value. It's a good entry point for a lot of folks versus the single family, although there is still a lot of single family demand. Hopefully this is helpful. What do I see in the coming month of March? Initially, I thought definitely say we're going to see a 5% bump, potentially, because I'm seeing a lot more competition as we try to buy homes for folks. But this war that may last a month may put a bit of a dampener on that. We could stay kind of balanced to last year and balanced to last month. So I'm not plus and minus. I'm gonna say right now, expected things to stay the same. I would have expected to be not as muted, but funny how uncertainty makes people feel uncomfortable. And you may say, why? Canadian stock exchange looks like it's gone up because we have a significant portion of financials and oil on our market. But if you look at the US market, it's actually taken a bit of a hit. So, and what's funny is that if you look at where people invest their money, as a Canadian, I still hold a lot of a significant portion of American assets. So my overall portfolio has come down. I don't think I'm that unusual. I expect a lot of fund holders have based on U.S. exceptionality, and that will take a bit of a hit. Not that it will impact, because if you're a long-time investor, not a big deal, but it does weigh on your mind. So again, weighs on sentiment. So I'm still believing that next month, until we have some level of resolution, the market will be similar to this month. No big increases. What I'm suggesting is we might have a delayed spring market. We shall see. Hopefully this is useful. Please reach out if you've got any questions or need some help. Always willing to chat. Otherwise, have a great week, as turbulent as it may be, and tune in.